You're listening to the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.
And now, it's time for the show that breaks down the options market. From unusual activity alerts to market analysis, strategy overviews, listener questions, and much more. If it involves puts and calls, then our all-star panel will break it down. It's time to hit the option block with your host, Mark Longo from the Options Insider Media Group, and co-hosts Uncle Mike Tussaw from RCM Asset Management, Andrew the Rock Lobster Joe Vanazzi from OptionPit.com, and Mark the Greasy Meatball Sebastian from OptionPit.com. The Option Block is brought to you by Options House, a powerful, easy-to-use, and intuitive online trading platform that's not only fast and reliable, but comes with dedicated customer service and a great trading experience. Trade on the platform that's top-rated by Barron's and Stockbrokers.com. With completely transparent, value-oriented pricing, Options House is your all-in-one solution for options, futures, and stock trading. Plus, open and fund a new account at optionshouse.com/insider today and trade commission-free for 60 days. Options House is a member of FINRA, SIPC, and NFA. And now, get ready to hit the option block.
All right, everybody. That rockin' tune means it's time once again for the option block. Everyone's favorite. Hopefully it's your favorite. I know it's my favorite bi-weekly source for all things options related. A little bit of options wit, a little bit of options wisdom, a little bit of options analysis, and all sorts of other fun stuff. Some education, some of your questions, a whole bunch of unusual activity, and we stir it all together into the frothy cocktail that is the option block. My name is Mark Longo from theoptionsinsider.com, as well as, of course, from the ever-exciting Options Insider Radio Network. Quite a few archive episodes of this fine program for you guys to choose from, as well as 14 other programs on the old network for you guys to peruse at your leisure. Easiest way to do that, head on over to the mothership, theoptionsinsider.com. Got a lot of great, cool content there that isn't radio-oriented. If you want to read some more about the UA we talk about here on the show, got a lot of it there. Got breaking news from the options market, got a lot of other educational, analytical articles going up there throughout the day. All of that aside from the legion of radio we provide to you guys. We're veritable content machines over here at the Options Insider Media Group. And, of course, while you're at the site, click on the Insider Radio Network tab, and your audio journey has begun. You can always, of course, also find us iTunes, TuneIn, Stitcher, Google Play Podcasts, pretty much all the major outlets. And if you're using some weird Lithuanian portal we're not on, let us know. Maybe we'll see if we can get on that one as well. And, of course, you can also find us always via our app available for iOS, Android, and the beloved Fire OS. And while you're listening, while you're streaming, while you're downloading, make sure that you send us your questions, your comments. We love to hear from you guys. It is indeed Mail Block Thursday, so you guys get some time on the old program as well. And, of course, if you are available right now, Thursday, 3 p.m. Central, 4 p.m. Eastern, love to see you in the old Mixler room there as well, where you can ask some live questions if you are indeed so inclined. And joining me on the old program today, the usual cast of characters plus one. Starting off, let's go in order of distance with the man holding down the seat over there in the Duchy of Maine, fresh off the heels of his trip to the big city. So now he's done for the year. He's seen people and civilization. Now he's retreated back into the hinterlands of Maine. You know him, you love him as the Rock Lobster, Mr. Andrew Giovinazzi from OptionPit.com. Mr. Rock Lobster, welcome back to the program. And have you recovered from your trip to the big city yet?
Have I recovered with my trip to the big city? I think I finally have. It's a week later, so I guess I'm getting there.
Only took you a week to get reacclimated to all things to all things Maine again, shall we say? And then getting a little bit closer to home, though still not here downtown yet. We visit a little provincial hamlet known as St. Charles, where we are joined, hopefully, if the Skype gods are smiling on him, by Uncle Mike Tusaw from RCM Wealth Advisors. We're going to roll the dice, see if these dear listeners. Uncle Mike, are you with us, sir?
Of course I am with us. I would never miss such a show unless Skype didn't allow me to, of course.
Yes, of course. In which case, yes, you would be probably find you some other way. Maybe that magical, mystical item known as the telephone. And then continuing to contract our circles ever closer, we get almost all the way to the Options Insider Studios. We stop about a block or two short, where we go down the river a little bit to the Options House HQ, where we are joined once again by our new partners in crime here on the old Option Block program, our friends over there at Options House, and their representative, their major domo over there, Steve Clausen, the chief investment strategist over there at Options House. Steve, welcome back to the show, and pretty boring week, huh? Nothing really going on with you guys.
Yeah, super happy to be here, and yeah, I've been a little busy this week. It's been exciting for us here at Options House. I look out the window and I can see those Options Insider
Yes,
Studios
I'm waving to you as
sit.
we speak. Well, I would be waving to you if I wasn't deep in the bowels of the building where the audio sounds the best, and not. We've done a few shows over by the window overlooking the river, and it looks nice, but yeah, the audio
doesn't quite sound as good, huh?
The road noise, the construction, the honking of the boats, and everything else, it tends to bleed through, tends to ruin the audio experience. Well, anyone who's been paying attention to the news cycle for the past week, you saw first off the earth-shaking announcement that you guys put out actually on Friday, that you are indeed the latest addition to the network. You are our new partners on the Option Block program. So first off, welcome to you. But then, that you weren't done there. That wasn't earth-shattering enough for you guys, as eyeball melting as that may possibly be. A mere 72 hours or so later, you guys dropped another big market-moving, earth-shaking announcement that you guys are now part of the ever-expanding E-Trade portfolio. So a lot of interesting stuff. I know, obviously, it's literally only a few days old. We're getting inundated with questions on it. I'm sure you guys are as well. Obviously, you can't really speak to a lot of the finer details yet because no one knows how they're going to unfold. But that said, this is kind of what everyone is talking about right now. So, Steve, have at it. The floor is yours. Whatever you can say about this deal, feel free to have at it. I know it's still really early days, but set some of our listeners' minds at ease who are tuning in saying, what's going on? What is this thing?
Yeah, not like you said, not a lot is exactly known, but the tone is very exciting. We're really excited here at Options House for our customers to bring our platform, which, that nice promo in the beginning talks about our very highly rated options derivative trading platform, and just overall trading platform, highly rated at Barron's, highly rated in stockbrokers.com, bringing that execution second to none into the E-Trade family, where they have a full gambit of cash management, self-clearing, all sorts of things that make it really, really exciting for us and our customers, and the E-Trade customers as well, and people that aren't E-Trade or Options House customers yet. I think we're going to be quite a viable offering in the brokerage space. So, like I said, there's not a lot of detail yet. Let's let the deal get approved and get through all that, which we expect, hopefully will be still this calendar year, but these things do take time. But the tone and the possibilities lead for mucho excitement, and we're very excited as well to be the sponsors of the Options Block, of course.
Well, we're happy to have you. It's been a tumultuous, not even a week. It's been 3 or 4 days so far, so very tumultuous. I walked by your HQ the other day. I could see a lot of activity flurrying over there as a lot of I's are being dotted and T's crossed. We've actually been through this on the program before, not quite this quick of a turnaround where someone comes on and then is immediately acquired. But we did this, of course, with our friends over there at Options Express back in the day, and they were acquired by Schwab on the program. So we have a lot of firsthand experience on this particular program, actually, and how these acquisitions can unfold, and they do take quite a bit of time. It was a year or so later before we really saw a lot of the details being finally decided and worked out. So clearly, 3 or 4 days in, we're not going to have a lot of details available yet. That said, I think there is one thing you can dispel for our listeners. We received, as you might imagine, a ton of questions on all sorts of different aspects of what this means for different accounts and tradings and what all sorts of things. I know no one can answer that really yet, but one thing I think you can clear up, we had quite a few people asking us, because the deal was announced as at Option House, does this solely cover Options House, or is it the whole kit and caboodle with Monster and everything else? I think you can answer that for our listeners at least.
Yes, Options House is the brokerage side of the Aperture family of businesses, and the other side, Option Monster, where my good friend Todd Rich is the president, and you've had him on the program a couple times. Our research analytics, trade ideas side of the business. It includes them as well. That was a significant portion of what they found appealing in the Aperture purchase. So yes, it includes both the brokerage and the research arm. So we're very excited to be going affiliated hand in hand to the E-Trade family.
Well, there you go. Everyone who wrote in on that one, you can now stop asking me that. It's been clarified. It is indeed the whole Aperture Group family of holdings, which is interesting. And like you said, it does make a certain amount of sense. So you guys, obviously option specialists, and E-Trade has obviously done a lot very well in the general finance and always have tried to compete with guys like you. And it's always been a challenge for them because they're not option specialists. Now they're bringing an option specialist in-house. So that makes a certain amount of a really intuitive sense when you look at it. For all of you guys asking questions, I know we got a lot of questions. Unfortunately, we still just don't know the answer. So we got some insight for you. When we know more, we'll be sure, and I'm sure Steve will come on and share a lot more insight when they know more. They're still figuring it all out internally as well. But very interesting, very exciting news on the brokerage front. It seems like it's been an active year for brokerage, M&A, and deals going on. You guys, of course, just coming off the heels not that long ago of your acquisition out of the Peak Six Group and joint with Monster, and then, of course, all the other. So that was kind of not that far in the rearview mirror for you guys. Of course, we had Trade King and Ally Financial not that long ago as well. So it's been a very active time in the retail options brokerage space. I'm curious to see what comes next. Speaking of what comes next, it's time to get rolling with the show and see what comes next in the trading block.
It's time to break down the latest topics, trades, and trends in the world of options. It's time for the Trading Block.
All right, everybody, welcome to the Trading Block. You guys know the drill by now. This is the portion of the program where we break down what was moving, what was shaking, what was rocking, what was rolling in today's broad market activity, and it was a bit of an interesting day. We are, of course, still in the teeth of earnings season. A lot of big names popping off today. And as you might imagine, that's been moving the markets around a little bit. Most of the markets closing or slightly unched on the day, not a huge end of day close. Though we had a decent range in the S&P, about 10 or 11 handles or so. Not a ton compared to recent movements, but still not a completely quiet day out there. But we saw a lot of movement around as earnings pulling us hither and yon. Of course, in most of the major indices, like I said, closing fractionally unched. S&P up slightly, Dow down slightly, and NASDAQ up a little bit more. But not a heck of a lot. VIX cash heading into the tail end of the week here, still hovering south of the 13 handle, right about 1275 as we are recording the show right now. So a lot of interesting stuff here to parse. Perhaps we'll start. Let's go out in order of distance again. Let's go back out to the Duchy of Maine, Mr. Rock Lobster. A lot of stuff popping off in the market this week. What's catching your eye in today's activity?
A couple of things besides Amazon earnings, and it is basically unched on earnings. $750, stock doesn't move.
Well, we're going to get to that in a little bit. Before we get to the after hour stuff that's popping off.
Oh, okay, sorry.
It's like you've never done this show before. I know you're new to the program, but I know the format escapes you.
It's just because we're all giggling about it. Sorry. Two things. One, Apple volatility 2-year low, 16% in August and even out to September. The market basically is totally discounting the fact that can move. Another thing as well is the market tried to sell off today. All the vol futures were bid a little bit, and then they all got flushed right down the toilet. So, like those lovely products like UVXY, which just split 5 for 1, is already down $3 since 10% since they resplit it. So if you're trying to use those products to get long vol, you would have already lost 10% on it. So what at least I'm seeing is just like the continued kind of grinding of vol. I don't know how low it's going to go, but we're starting to see unbelievably low numbers at this point in this stuff. And I don't know how low it gets.
It's been interesting to watch. You're at Apple, of course, popping off earlier this week, perhaps surprising some people, not trending to the downside. They've become masters of kind of that undersell of the earnings now as well, and saying things aren't that great. And then, of course, once the number comes out, it actually is fairly decent. Apple back above that magical century mark, hovering right around 104.5 or so right now towards the end of the day here. And interesting stuff to watch. A lot of people were looking at, I know, downside out there. Uncle Mike talking about maybe getting back in if it got in the 75 handle. A lot of reports come out ahead of time of Apple earnings. This is dead money. Price targets being cut down to $85. And all of that leading up to surprise to the upside. So they've got that underselling going into earnings down to a pretty impressive science at this point. Uncle Mike, Apple coming off earlier this week. Anything else that's catching your eye in today's activity, sir?
Well, here's what I'm noticing just throughout the week. We had a Fed that said the economy is good, but we're not going to raise rates. We're going to keep pausing. So I would imagine that would be good for the market. You never know, but I would think that would be what the market would want to hear. Apple came out as just basically is doing very well after earnings. Facebook doing very well after earnings. Amazon, we'll see. Maybe they're waiting for all the guys over at the option pit to do something with their short shares or their long shares before they make a move. They probably are listening to the show right now. But what I'm noticing is that we're really at a similar spot to where we were 2 weeks ago in the marketplace. We've not been able to really break out. We broke out a little bit 3 weeks ago. That was kind of the magic week when we started the breakout, but now we're just kind of sitting there. We've had what I would perceive to be good news in the marketplace over the course of the last couple of weeks, but we're not going any further. I'm still of the school of thought right now. I could see us going up a little bit more or a lot down. So I would be very careful at this point based on those facts. We're still kind of just sitting there, and nothing this week is really pushing us upward. Oil has come down a lot. That's the other thing that I'm noticing in today's marketplace. We're down 84 cents today in crude, so that's another thing that could be construed as a drag on the market. And the other thing is that bonds are relatively the same as well. So I'm very cautious at this point. So I'm only 99% bullish today by my standards. Who knows? But be careful out there, folks.
99% bullish. That's almost bearish for you at this point, sir.
That kind of is bearish.
You diehard bear. You just shorten everything willy nilly. Only 99%. All right, and last but certainly not least, Steve, it's been a busy week, but it must be nice to kind of just dive back into the markets again and talk about some actual tangible things that we can sink our teeth into. So, speaking of which, what have you been sinking your teeth in today? What's catching your eye in today's activity?
Yeah, I think this is this often happens during earnings season. You look at the overall market, doesn't move. The VIX actually comes in. You think, but earnings are this volatile event, right? But they're specific stock volatility, right? So we're seeing Ford down 8-9%, Facebook up, market kind of unchanged. And that does happen during earnings season. So I think people need to shift from looking at, macro hedges and doing things in the broad-based indexes and ETFs, and they really do hone in and focus on individual stock stories and play those individual earnings events. And interestingly, and I don't have specific data on this, just anecdotally, the at-the-money straddles, the moves in some of these stocks, and we'll get to the ones today after the close in a little bit, but the moves in some of these stocks have actually outperformed the at the money, weekly straddle, which a lot of times the weekly straddle gets so bid up that, they have tremendous earnings and yet still the short sides prevail. But the ones I've been sort of looking at, and again, it's anecdotal, it feels like, wow, they're actually moving a greater amount on the stock specific without the overall market necessarily moving one way or another.
Well, let's get into some of those names that are popping off here after the bell. As the Rock Lobster alluded to, it is a busy time, busy day for a lot of earnings. Let's kick things off in the realm of Amazon. Of course, they went out. Where did they close? Let's pull them up. So they were hovering a little bit south of 750 for a better part of the day, closing a little bit north of that, about 752.61 or so. They were pricing in about a $50 straddle, so it was about a little over about 6.5% out there. And right now here in the after hours, they're moving about $13.50, so about 1.8%. So as the Rock Lobster said, bit of a resounding meh so far. I think they're up a little bit more earlier on first blush, about $22, and they since have kind of given up, looks like the lion's share of that. So who knows, after all this, after pricing in so much juice, maybe perhaps a wee bit overdone out there in Amazon land. Looking at Alphabet / GOOG / call it whatever the heck you want. They're also popping off today. They closed at the end of the day here about 745.91 for the old GOOG, and Google, aka Alphabet, about 765 or so. And the good old Googs in the after hours up about 15 handles or about 2% after they were pricing in about nearly $40, or about 5% move. So they're also looking a little bit slight when it comes to the after hours and the movement they're in. We did see going in the day, a lot of people were lining up. People were writing, including our friends over there at Trade Alert, remarking on how this was a pretty rich Amazon straddle. Intraday, it was a little over 7% that they were pricing in. Also had a lot of interesting activity they were sharing, including the fact that the biggest, most active option this week out there on Amazon, the 700 put. So there you go. People looking perhaps for a little bit of dark side action here on Amazon coming up. But not the same analysis coming in to good old GOOG this week / Alphabet, where we saw a lot of interest in calls. In fact, again, according to our friends over there at Trade Alert, all 10, this is as of yesterday's close, not today's, may have changed a little bit, 10 of the most active stock options out there in good old Alphabet are calls. So interesting stuff. People expecting a little bit more upside, getting some upside, but perhaps not exactly the extent that they were bargaining for. We also have coming out after the bell here today, good old Baidu. And they were hovering right around 165, 166 in the end of the day. And they were pricing in about $10, so about 6% on that name. And so far here in the after hours, if for some reason my platform is hanging. There we go. That's a little bit better. All right. Yeah, they're up about not even 1%, about a little over a handle in the after hours, right around 167. So again, kind of a bit of, looks like the market kind of shrugging these off so far. I don't know, Steve, what do you make of perhaps these names not really outperforming their straddle, and also a little bit of maybe any interesting activity you were seeing along the day there over there at the Options House platform? Are you seeing a lot of the OH clientele? Are they flocking into these names? These are pretty popular with a lot of the retail traders, or are they maybe staying clear there or doing something else? What was the activity over there? Not the corporate side, but the trading side over there at Options House today.
Yeah, so we definitely coach and educate our customers into understanding what happens with earnings, right? It's a coin flip. It's a binary event. The stock's going to move. Is it going to move enough? Is it not going to move enough? And we really do encourage our folks to look at limited risk, limited return spread type trades to make sure that you're not paying this excessive volatility of a at the money straddle of an out of the money option, and using spreads to try to gain your exposure. And so that's really what we see a lot of people doing. They do just straight verticals, call verticals if they're enamored with the stock, and put verticals if they think there's going to be a hiccup, and that way you're taking that elevated implied volatility and then the crush that comes after the event is over out of the equation quite a bit. So I think that's prudent, to swing for doubles and singles and not try to hit the big home run, because as you say, as soon as I say the individual stock moves are
he was right about to tell us, and then we lost him. And we also lost, looks like, some bad weather up Uncle Mike's way, so he actually lost his power. So a lot of interesting things going on out there in the realm of all things option block, as well as a realm of all things options. And as I was looking here, it seems like things are just working sluggish today. The platforms are giving us some dated quotes. We're refreshing here now. It seems like Amazon moving a little bit more, up about 21, 22 handles. So nearly 3%. Obviously, they were putting out some stale quotes. Maybe so much interest in these that everything's just chugging along in the after hours. Still well shy of where they were pricing at, about 50 handles, but a little bit more than we were seeing earlier. Same thing with good old Alphabet, up about nearly 4% or about 29 handles. So a little bit more upside move than we were talking about before. Again, well shy of that straddle out there. But all sorts of other things interesting still popping off, and we'll keep working on making sure Uncle Mike is okay. I know there were some bad storms out there in his region. We'll check in with him as we move right on into the Odd Block.
It's time to break down the most interesting, unusual, and downright questionable options activity that's been identified by theoptionsinsider.com. It's time for the Odd Block.
All right, everybody. Welcome to the Odd Block. Like the name implies, this is the portion of the show where we bravely foray into the shady side of the options business, so you don't have to. We bravely take on that danger, put on our trench coat and our nice deer stalker caps in hand to ferret out some shady dealings, some shady business. Gonna kick things off in an area we don't usually frequent here on the Odd Block, the uber dangerous realm of crafts, arts and crafts. Yes. This is Etsy. This is the popular online marketplace for people who are crafty, make a lot of home stuff and all sorts of fun things that I know nothing about because I am not a crafty, not in that sense anyway, person. This name, of course, ticker symbol Etsy, ETSY, closing $10.11, up about 3% or at about 30 odd cents on the day today. It's a name that does, or I should say doesn't really do a heck of a lot of paper, not a lot of love for Etsy out there, only about 800 some odd contracts a day. Today, doing about 4,800, nearly 5,000. And of that, about, breaking down to about 53.3 to 1 calls over puts. That should give you some inkling, some idea of what caught our eye out here in Etsy land. In particular, like I said, it closed a little bit north of $10. We saw someone saying that they like that 10 level, and they're going to gobble some up. We started first seeing one mega block, particularly for this name, of 3,000 going up. Looks like paper buy-in over there on the Philly. As the day went on, a total of nearly 4,400 over there on this strike. It's a little bit interesting when you start parsing it because there's pretty much one strike with any OI to speak of out here, and it's pretty much a SEP 10 strike with nearly 12,000 contracts open. So it could be a friend of ours maybe wrote this strike a little bit aggressively, deciding today when the strike breaks through the 10 handle to close some of those out, or it could be someone deciding this 10 handle is the place to be and piling in for a little bit more upside love here. Looking back at the year that was out here in Etsy land, hasn't been the best year for, at least it wasn't until a few months in for the crafty folks. This thing got down as low as about 630 or so. It seems like right again when the market was feeling its most turbulent back there in the Jan-Feb timeframe. Since then, it's kind of been slowly clawing its way back up, made it all the way back up to the 10 handle since that time. So not a bad little retracement. And our friend here either concerned that it will keep running and is buying those bad boys back, or is happy and thinks it's going to keep rolling. Mr. Rock Lobster, which side of the fence do you fall on? And also, B, since you're out there in Maine, I'm assuming you have to handcraft all of your goods. You must be a very crafty person yourself.
I am handy. I know just enough to actually be dangerous, I think. So yes, you do need a little craftiness. The interesting thing about Etsy is that the thing has no earnings. The earnings move are like less than or barely $1. So I think somebody's just taking a punt on this thing. This website making a comeback.
Seems like it. It does seem like, but there is size open interest there, which is kind of weird. Usually you don't these little names when someone aggregates at one strike, unless this guy's been hadn't had a chance to dig in to when those calls were opened. Maybe that'll tell more of the story after we do that. But still interesting stuff here.
They're paying $1 to buy them back.
Tomorrow we'll see whether that open interest decreases, stays the same, or increases. If it increases, the guy's piling in. It is interesting, like Andrew said, it's in September when they announce earnings in August, so it's clearly not an earnings play. This stock doesn't move that much on earnings, so it's more a fundamental. The world's going to get better in the craft corner of it. In the next 51 days, someone's possibly speculating.
Yeah, interesting stuff. That's always a source of frustration for a lot of our listeners. Talk about it on Tech Show a lot. Sometimes on here, too, people have to wait a full day for that open interest to be updated. People saying, how come we can't get that instantaneous? Maybe someday in the near future, we'll have a little bit more insight into that. Maybe at least updated at certain periods throughout the day, because waiting a whole day is kind of antiquated at this point. But wait we must to see where the truth lay with that name as we move on into another name. We haven't talked about this one in a while either. This is the Technology Spider, aka XLK, closing today about 46 and a quarter, pretty much unched on the day. This is a name that does, like any spider, does pretty decent volume, about 12,000 contracts a day, doing a fair bit more than that, doing about 41,000 today, 17-1 calls over puts. And if you guys pull up the options chain, listeners, you'll see for yourselves exactly which one kind of jumps off the page. We saw somebody just looks like perhaps in a very, very aggressive close here, in a very near-term close, really, I should say as well, in the weeklies going out at tomorrow, actually, so dailies at this point. The 46 calls, paper just gobbling into those bad boys, starting off with a block. It looks like about 24,000 going up for 33 cents. As the day went on, a total of 36,000 and change going up at a variety of different prices. Total open interest on the strike about 37,000 and some change. So that matches up fairly nicely. Went up price variation, but we didn't see any stock. Usually it indicates there's a stock print going up with it. Didn't see any size stock. Maybe some small chunks went up, but nothing that would seem like it was a big delta neutral play in the name. So it looks like kind of what it appears to be on the surface. Someone deciding to take those bad boys and just go home, not playing anymore. And looking back at the year that was here in XLK, obviously take that outlier of August 24th off the table. It's been kind of an interesting year. It's kind of been vacillating from the high 30s into the mid 40 range. Right now, kind of at the top of that range. So someone perhaps either overrode aggressively and deciding, hey, this is a good time perhaps, or having his hand forced to take some of those off, or deciding, either way, I don't want these bad boys going out, but either way, they're going away tomorrow, which is an interesting play here. About 28 cents in the money here. So these are suddenly very relevant. Mr. Rock Lobster, what's your take here on someone deciding perhaps to wipe the slate clean here on the July 46 strike in XLK?
This one to me just says like the rally's done, don't you think? I'm done. Even though we had earnings today in Google and Amazon, they're just taking their money and they're going. That's just, and I don't know really how much they're getting out of them for 30-something cents. I don't really know how much money they made on them, but it's just feeling very much like, and I'm looking here after hours, there's not a whole lot of movement in it. So I think that is a good indicator. Just, maybe I like it too. So I was saying earlier, just the rally stalling.
Yeah, it might very well be. It's interesting to see these kind of big index plays in these various names coming up right now here, as I'm just live tweeting some stuff here for some of our listeners who are tuning in with us live. As we move on here to our final name, our final victim here on the old odd block today. This is, I believe, a newcomer. I can't recall speaking about this one here on the old program before. This is Yandex, ticker symbol YNDX. If you're not familiar with this name, this is an internet and technology company, which should really explain a lot for you here, as it seems like all the fun issues with our platforms are starting to plague me here as well. I will soldier on nonetheless here. This is the name. We saw some interesting paper going up out here as well. This name is post-earnings, so not exactly an earnings spec out here. And what we saw is a name that does, let's see, ADV of about 2,500 contracts a day, doing a fair bit more than that. We saw over 3,000 piling in to these Yandex AUG 23s, and also, as it calls, and also the 22 half puts for an extremely tight strangle here, $0.50 strangle, and doing it for $1.80. So someone clearly thinking this thing is poised to run. They don't really care which way it runs as long as it gets the heck out of Dodge from where it is now. This went up pretty much scattered size across all the exchanges. Some traders coming in and just bidding these things, lifting offers on this thing just to get all the size they could, just fighting their way to get 3,000 contracts done. But apparently, someone putting their money where their mouth is on a size aggressive move here in Yandex, and not waiting a long time to do it. Only looking out to AUG or so. Mr. Rock Lobster, your thoughts here? Again, didn't go up mark, strangle, or spread, but we can do the math there and put 2 and 2 together, can we not?
We can. I tried to do I actually tried to think a little. I thought to myself, okay, they're buying calls, they're buying puts, and they're buying them all on all the exchanges simultaneously. What are they trying to do? What are they trying to do? So, you know what's weird is they didn't even wait for the vol to really come in. They just bid it through the offer, like almost from the get-go. So there were a lot of standing bids posted on several floors until it all filled. But someone wants 3,000 strangles in Yandex, which is a pretty large amount.
I don't know, Steve, I'm guessing Yandex, not a volume leader on Options House platform on a day-to-day, or, hey, maybe it is. Maybe you guys have the market cornered on the 3 guys who trade this thing every day.
No, I don't think this was a retail play at all. I think you're right. It's very interesting that earnings announced and post-earnings, these things trade, and they, like we were saying, they trade aggressively, just go buy them. So there's some, when you talk about what's going on, I think we might be coming back to this name and saying, hey, remember back in July when these things traded after the earnings? And I think we'll know a little bit more whether this guy was right or wrong.
We'll mark this one in the to be watched category. We like a good strangle here on the old odd block. So we'll keep an eye on this one and see if perhaps more comes of this. This guy's right. It won't be too long to determine if he's on the right course or not. Meanwhile, though, it's time for us to keep on rolling with the show. It's Thursday. It means it's time to get you guys featured on the show. It's time for the mail block.
It's time to take your seat on the All-Star panel as we read your emails, tweets, Facebook messages, website comments, and much more. It's time for the mail block.
All right, everybody, welcome to the mail block. This is indeed the portion of the program where you guys get to take the reins, dictate what we talk about, where we go with our conversation. No shortage of ways for you guys to hit us up to do just that. Of course, if you're streaming live, you can hit us up via the chat room there or via the social media platforms we like to monitor as well. Twitter, we're at Options. Facebook, The Options Insider or Options Insider. On Stock Twits, of course, you can always hit us up via the website feedback form or via questions@theoptionsinsider.com. Or if you're so inclined, you can hit us up via the mobile app. Most of that stuff baked into there as well. All right, we got a bunch of questions here, and a lot of them having to do with the whole Options House merger. Clearly, we don't know a lot of those things, so we'll stay. All right, here's one, actually, I think, Steve, you can address. This one comes from listener AWorth. He writes, or perhaps she, Can the Options House guys explain how their short buyback program works? Is it only for outright shorts, or if I have, or a little bit of a run on here, or if I have a short leg of a spread that is near the money on expiration, but trading under $10, 10 cents, can I close that out without commission, or do I have to close the whole spread? Wow, that's a one sentence. That's impressive. All right, let me see if I can translate that. Steve, he wants to know. He talked before, obviously, last time you were on the show about how you guys don't charge a commission when people are buying back their shorts. A move that we wholeheartedly endorse here on the network. We want to incent people whenever possible to take needless risk off their books, and that's the best way to do it, is make it free for them. AWorth here wants to know, does that include spreads? Let's say someone sells a put spread out of the money, and then the underlying drops a bit, and now that short leg getting a little bit closer. Can he still use that same scenario if it's still under a dime, or how does that work?
Yeah, great question. The main thing is the program works automatically, meaning anytime a short leg is bought to close and the premium paid is 10 cents or lower, there will be no commission on that portion of the trade. If it's done individually, obviously there's no commission at all. If it's part of a spread, say they roll a short call down, right? The stock's fallen a little bit. Now the call that they sold is trading for 8-9 cents, and they want to buy that option back in and then sell a meatier or a juicier call option against it. The contracts that are bought for 10 cents or lower will be no commission. The new sale price, sell to open, of course, that'll have a commission, and those contracts will incur a charge. So you don't have to worry about whether you're doing it as a spread, closing it as a whole spread, closing one half of a spread, closing one, just the short leg of a spread. Credit spreads sellers are, using this to their benefit, by just closing that short option, the single short option leg when it's under a dime, and why sell the other one for zero essentially, and doing it as a spread, just close the short risk, and it happens automatically, so you don't have to apply for it or do anything special. You buy your shorts at 10 cents or lower, commission free.
There we go. We like that. Hopefully, AWorth likes that as well. I make them jump through hoops when they don't have to. All right, here's another question. People have dividends and covered calls on the brain. I think ever since I mentioned this on the show a few weeks ago, we've been getting just inundated with the email and I think people, like I said before, people are just kind of flummoxed by the idea. I think that I said it was you can create your own dividend income stream using covered calls. Clearly, that blew their minds. Let's just focus on an income stream. Take the dividend portion out because it was kind of in air quotes there anyway. Let's focus on that. This question comes from Thomas Hatch. He writes, I like dividend yield stocks. I listened to an earlier show, and you mentioned writing covered calls to generate dividends. Can I apply this strategy to dividend yield stocks? Any risks I should watch out for when doing this? Well, Mr. Hatch here wants to have his cake and eat it too. He wants to get a high dividend yield name, and he wants to write calls on top of it. He wants a double income stream. I say to you, sir, first off, you are a piggy. And secondly, yes, you can do that. In fact, it's encouraged. That said, though, there are a few caveats. I've been talking for a while. Uncle Mike here, why don't you roll with this one? What do you have to say to our friend here, Mr. Hatch? And what should he be concerned of when he's out there writing covered calls? Let's say your typical proverbial, 3 to 5% out of the money covered call on a high dividend paying stock.
Well, a couple things in that. Number one, you're not going to get as much premium when you're doing this on a dividend paying stock. So let's say that you have stock A pays a dividend, stock B does not. They're both identical companies, identical volatility, identical everything. Overall, you're going to get about the same amount of income doing it. If you look at the puts and calls on a dividend-paying stock, one with significance, I'm not talking one that pays like 1/1,000,000th of 1% every 4 years. I mean, one with a fairly significant dividend, something like a Verizon, just something that actually pays a decent dividend. You'll see that. So What I would encourage them to be concerned with is that, number one, the general risks of writing covered calls against something is that if the stock does go higher, you have the upside risk. You have to have the understanding that if you do get called away, you might not get your dividend if you get called away, just depending on when you get called away in relation to the ex-dividend date. So have an understanding of that. And of course, the main thing as well is make sure that you have a plan in case the stock goes down significantly. Oftentimes I've heard people say, oh, I like to write covered calls because it's a good hedge. And I always say to that, well, yes, no, and kind of. And what I mean by that is that the covered call is a Band-Aid hedge. And if the stock goes from $50 to $49, that's like a paper cut in the stock in reality. And a Band-Aid works very well for a paper cut. However, if the stock goes from 50 to 20, that's a severed jugular, and a Band-Aid doesn't work too well on a severed jugular. So have an understanding that just because you're getting all this income, you still have this risk of the stock going down. Make sure you do your homework and make sure you really have a good amount of knowledge of what you're getting into before you do it.
Yeah, it always drives me crazy when people think of covered calls. You're right, as some sort of hedge, because you're right, they're little to nothing in terms of hedge. And of course, when you think of the risk equivalency, when essentially they're out there just writing puts all day long, and people learn that for the first time, and their eyes go really wide, and they don't really understand. That's always a fun moment to have with them. So think about that. Of course, Uncle Mike mentioned the downside risk when you have these high dividend paying names. Just be aware your chances of having those stocks get called away and the options get called away a little bit higher because they are paying names. People always forget about this component when you're writing covered calls on these names. They forget there's a dividend. It happens in SPY a lot. Whenever that dividend gets it's a regular dividend, people are regularly surprised by it. I don't understand why that is always the case. But of course, a little bit of shorthand you can always do is look at the put on your strike against your call and then compare it to what the dividend is. And where that will give you some inkling as to the comparative value of the two. The dividend is higher than the put. There's a little bit more juice there to be gained rather than if the put is higher, then you don't have the same issues there. I know. I'm guessing Steve, you probably get questions on this probably on a regular basis over there at OH. I'd imagine covered call trading is a pretty frequent trade strategy a lot of your clientele use. And I'd imagine you probably get this question a lot, particularly maybe, again, around the SPY quarterly or so dividend, or people are surprised and what's going on there. So maybe you walk people through some of the other logistical issues that come from writing covered calls on heavy dividend-paying names.
Yes, actually, the week of September expiration, the SPY quarterly dividend is always a problem for new covered call sellers or credit spread sellers. The ex-dividend date is on Friday of expiration, of the quarterly expiration, March, June, Sep, and Ds. And actually on the week of September expiration, we're going to be having a webinar specifically about this danger because we want to educate all our customers to know the risks associated with that. They aggregate all the dividends over the course of a quarter, so that dividend for SPY is oftentimes greater than $1. And your little trick of looking at the put is very, very helpful. But since it comes right on the quarterly expiration, there's only 1 day left. There's very little volatility value for in the money options, and many of them are exercised on Thursday night, obligating people that are short stock then to owe that dividend. So it is important to stay on top of that. Covered call traders a little bit less risk just because they're losing their long stock rather than actually becoming short stock. But nonetheless, having your cake and eating it too, great saying. You might not get to keep your cake if you are short an in-the-money covered call by the time the ex-dividend date comes along, and you do need to be aware of that.
I do like that you're having that webinar right around that day, because that makes perfect sense. I think every broker should do that. Just record that one kind of stock webinar and just replay it every quarter or so, because it's amazing how people forget. They think of SPY as just this big product, and they don't think of it as having this dividend component. And time and again, we get We look at our email, we get that same question flooding into us right around that same time, 3 or 4 times a year, and it's like clockwork, always the same time. And I said, it's SPY dividend time. I don't even have to look at the calendar. I just know, judging by the emails. Well, we got time for, I think, one more quick one. Mr. Rocklop, so we'll give you this one because this is a weird one. You get to draw the weird one today. This one comes from, I love our listeners. They take us all over the place on their listener mail journeys. This one comes from 777. He or perhaps she writes, are we aware of any specific gold arb between the Chinese gold derivatives and their U.S. equivalents? So there you go. Have at it, sir. Mr. Rock Lobster. I know you like slinging a lot of GLD. Tell us some good arb between that and the Chinese gold equivalents. Go forth, sir. The floor is yours.
Absolutely no. I have no clue. I think, doesn't the Economist have the Big Mac index, or the cost of a Big Mac in one country is they use the price of a Big Mac to do purchasing power parity?
I think they do, yes.
They do. The Economist does it every year. And it's surprisingly accurate for currency prices. Basically, a Big Mac is $10 in China versus, so they're trying to say whether it's overvalued or undervalued. So I figured, Chinese gold has to be, yuan based, and U.S. gold is dollar based, I guess. So somehow there might be some purchasing power thing there. So read The Economist and do the Big Mac purchasing power parity and decide which country the gold is cheaper. There you go. That's my answer.
There you go. It all goes back to the Big Mac. I know you're slinging a lot of GLD. Uncle Mike, any thoughts on this, your secret Chinese arb trade?
I have no secrets, nor do I have any Chinese arb trades, so I'm going to leave that one where it is.
that certainly gets the weird question award of the week. I love it. All right, I think we'll close out on that one as we keep on rolling right on into Around the Block.
It's time to tell you what we'll be watching on our trading screens until the next episode. It's time for Around the Block.
All right, everybody, welcome to Around the Block. This is indeed the portion of the program where we tell you what we're keeping an eye on for the rest of this week into the old weekend. Really quick, let's check back in with some of those names we were following earlier. Amazon giving up a little bit, a lot more of, I should say, of that lead than it had before. Only up about 12 and a half handles right now, or about 1.7% in the after hours. GOOG hovering around, about $29 or so here in the after hours, up about nearly 4%, right about the 775 Alphabet, I should say, level there. And let's see, otherwise, coming out, we did have CME before the bell this morning. If you still like playing in our space, and got a little bit more on tap for you tomorrow. Got SIBO coming out before the bell tomorrow, so hopefully if you are going to play that one, you've done so already. You've missed your chance otherwise from an options perspective anyway. We also got Exxon Mobil and Merck and UPS coming out tomorrow. Of course, we had the big FOMC earlier this week, and as surprise, not a heck of a lot coming out there, so we can kind of maybe at least cross that one off the calendar for a little while at least before we have to mention the Fed again, which will be nice. But that said, what else is catching your eye? What else are you guys watching for the rest of this week? Perhaps we'll start with you, Steve. What are you watching for the rest of this week into the weekend?
Amazon after the close today were really exciting, but I'm actually interested in seeing these two oil giants, Chevron and Exxon Mobil. Oil at a low again today, and yet we want to see what impact that has had on earnings for these guys in the past quarter. Because some individual oil company names did all right today as oil fell a little bit more. Oil to me is sort of a proxy for the economy. Are people using energy? Are these guys making money? And I'm looking at that as sort of a indicator of a little bit more of a macro theme.
There we go. And Uncle Mike, what's catching your eye for the rest of this week into the weekend, sir?
Well, I want to see follow through, just to see how things can react now that the market's had a chance to digest the information. Verizon, for example, with buying Yahoo, I want to see, hasn't been a lot of movement out of Verizon. Want to see if what happens with it, if anything. McDonald's, they just have had a little bit of a dip from their announcements, and want to see if that can be a buying opportunity. Just to add to what Steve said, oil, XLE in general, want to see if we can, this is a buying opportunity, and as well as Alibaba, want to see if they can continue. They've been coming up a little bit lately. So follow through is the key word for what I am watching the rest of this week.
All right, and last but not least, Mr. Rock Lobster, take us home. What are you watching in your neck of the woods for the rest of this week?
I am watching basically how low vol can go, and we got a non-farm payroll number, which pretty much ignited the rally last time. It propelled us to all-time highs. So are we going to do it again? So, but this still is very weird to me because we still have this experiment of we have negative interest rates on what? $13 trillion worth of debt now, and it just keeps getting bigger and bigger. And how long does this great experiment last that the central bankers are doing? I hope it works out okay, though. So, in the back of my mind, that is always there. However, the market doesn't care right now. That's what it is. So I think a lot of the technology stocks have reported pretty good earnings. The financial companies did okay, and I guess oil is really the next big thing. And it's like, how do you trade a market just with the vols really low? I think, and most of that is just, I believe anyway, it's just there's going to be a point where vol is so cheap that gamma-wise, it's worth it just to buy it. So that's what we have. It's just kind of we're sort of this little strange spot with the vol so cheap. But I would go into vol products, but I won't.
We have a whole nother show on the network for such talk. But unfortunately, that music means it's time to bring to a close this fun foray into the world of options. But before we go, one last time, let me check back in with my cohorts here, my partners in crime, see what they have cooking that may interest you. Let's start with you, Mr. Rock Lobster. Go back around the horn one last time. You just had your big sojourn here in Chicago, your professional trader summit. So what else, if anything, do you guys have on the radar over there in the land of the pit?
We have a commodity option Saturday class this Saturday taught by a friend of Mark's who is trading every day. So he's going to teach people about commodity options, how they work, skew, and just kind of the vagaries of those particular products. So like I said, for an eighth on a 10 lot, you're going to learn how to do it. So there you go.
You said eighth on a 1 lot. They're going to hold you to that now. That's your new price. Deal with it. But the vagaries of skew, you could certainly fill many, many hours discussing those vagaries therein. And Uncle Mike, what's cooking in the land of RCM Wealth Advisors?
Well, I think for less than an eighth on a 1 lot, you can buy my book online on Kindle. Go to Amazon and type in Go Long, New Option Strategies for Buy and Hold Investors. Just kind of outlines a lot of what I talk about on the show. And also, if anyone is interested in investing with an advisor who works with options very frequently, feel free to contact me. I am at 312-212-3531 or email me at mtusaw@rcmfs.com.
And Steve, you get the unenviable task of plugging your platform today at a time with probably one of the more difficult plugs we've had to do here on the network because you guys are still in the process of figuring everything out. That said, if there is anything you could plug over there, anything that's coming down the pike you want to let our listeners know about, have at it, sir. The floor is yours.
Yeah, I will tell you, we have, in my humble opinion, I think the best platform for option derivatives, stock traders to be able to manage their risk, look at the risk real easy. And what I want to talk about that's coming up is to Uncle Mike's comment about volatility is just getting so ridiculously cheap. Not that it means it can't get cheaper, but I am actually hosting a webinar in mid-August soon on the stock replacement strategy, which takes advantage of that low implied volatility. And you can cash out and take some chips off the table, exchange your long stock for long in-the-money call options, and you have a downside hedge. You can employ leverage. You can speculate on further upside. And I think the time may be getting right for people to consider that kind of strategy.
I love the stock replacement long term. I like juicing it up. Maybe right now isn't the best time to do that, but juicing it up with some near-term covered calls as well and then you really kick it into high gear. I've heard that strategy called a bunch of different things over the years. I tend to call it a synthetic covered call just for fun because I know it angers people. Some people call it a fig leaf. I've heard it called other things, but one of my favorite strategies. Check it out. Can they get that through your website there, Steve?
Yeah, absolutely. Optionshouse.com. Come to that page, learn about our platform if you're not already a user, and that's where our education is found on our webinars section of that optionshouse.com webpage.
There you go. All right, everybody. On behalf of Uncle Mike and the Rock Lobster and Steve and indeed myself, I want to thank all of you out there in the listening audience for downloading and streaming and subscribing to the show. It's been a fun one. It's been a fun week. And we'll see you next time for more of the Option Block.
The preceding program was a production of the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions@theoptionsinsider.com.